Good morning, everyone. How's everybody doing? For sure, for sure. Yes, Tom, if you're listening, not a problem. Alrighty. Happy Monday, happy Monday. Sean, what's going on? Hola, hola, Juan. ¿Cómo está? Everything okay? Well, folks, we had another gap down, but you're snowed in, Kevin? Yeah, I think some people are snowed in. I hope they have power. Hope you guys have power. If you're on stream, I guess you have power. Ah. So, are you guys kind of seeing a pattern? I'm seeing a pattern, right? Weekends we have news. Sunday night we gap down. Then we trap a bunch of shorts who painfully follow price. You know, they follow price down here. They get trapped, and there's a couple of places where the shorts are really trapped. One is, well, this is what happened. I mean, I was actually awake, and I posted this in the room, and I told you guys to look for these levels here for bids if we liquidated. But the problem is we gapped into the bids. We capped under these bids, and then by the time everybody figured out what was going on, we were back up over 69.10. So we were only underneath 69.10 for half an hour, right? That's the one thing Market Profile teaches you. How much time do we spend under a level before we pop back up over it, right? That's a very interesting thing because think about it like this, right? Because it's a market, right? Think about if we put this market on sale, how long does that sale last? Does it last for half an hour? Does it last for 2 hours? Does it last for 6 hours? Right? So we only were underneath 6,900 really for less than half an hour, right? And then right back up over it, everybody who got short here because they were looking for this, right? They were looking for these lows here, and we didn't get down there, right? And I'll show you why, right? There's an actual structural reason why the overnight low is where it is. And when you see it, it's a small, tiny, little nitpicky detail, but I'm telling you, the devil in this business is in the details, right? The devil is in the details. Hey, Raj, how you doing, brother? You must be tired from all that driving. The devil in this business is in the details, okay? It's very... I'll show you, okay? So what happened was people got short here, they added here, and then we went for a gap fill. When we went for a gap fill, everybody shorts the gap fill, right? That's a common thing. I've shorted a gap fill. The only problem is they shorted it and it went sideways for a little while. When it went sideways for a little while, they added to it, wham, right? Supply cut off. On that retrace, Another look below and fail of the previous day low. Wham, right back up again. So now we have shorts trapped here, trapped here, trapped here, trapped here, trapped here, and trapped here. Right? The bottom of these candles are where the bids are not filled. Support is created by unfilled buy orders. I happen to know a little bit about this because when I run a stock, I take it up, and then when I run out of buyers, I'll bring it back down, I'll sell it back down. And then right when I see that there's some buyers here, because I know people who have shorted it, I'll put a bid for 1 million shares here, and then I'll rip the offer. These people are trapped because what they'll do is they won't short it here, they'll short it here. So I get them short here, I get them to average up here, and then boom, I rip their face off. Right? Now, this isn't done intentionally in a large market like ES. There's not some guy sitting behind, like with a wizard's cap on doing this. What it is traders always make the same mistakes. Right? They always make the same mistakes. And their short-term memory is basically they're like Harold and Kumar when it comes to short-term memory. They will make the same mistakes over and over and over and over again. And the reason why they make these mistakes over and over and over again is because they're not thinking about the business. They're following price. They're thinking, my algo told me to do this. Well, did you double check with your algo to see if your algo is right? Right? It's your algo's not HAL. Right? It could be wrong. Right? So that's what happens. And now overnight inventory was short. So we're waiting for that point of control to move up here. We're in good distribution. And guess what? We're back in the range of Friday and Thursday. Right? We're back in that distribution range. The only difference is we flushed out a bunch of margin longs down here. So let's see what happens today. Today, if we take out Friday's high and Thursday's high, then we'll be gunning for 69.83. Okay? Otherwise, we'll just go back and forth. We could go back and forth because Wednesday is the Fed. Right? So today might be the only time to make some scratch for these larger traders. Tomorrow they're going to go into rope-a-dope, right? You guys know what rope-a-dope is? That's when you're getting punched, you just put your arms up and let them punch you out, right? The size traders are still long product here. Distribution, flash sale, back to distribution, right? Distribution and accumulation are not theories. They are actual business practices that go on in markets all the time. Right? Because that's what it is. It's a market. You're there to distribute, in this case, ES contracts, right? In other cases, we're distributing, stock, right? You're distributing stock, right? Speaking of distribution, look at gold. Hello. Silver. Jeepers. Gap, 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 gap. Right? These are thinly traded markets. Where's the daily volume on this thing? Right? Gap. Gap. These are short positions. Right? Yeah, gold member. When I was on the trade desk and back in the 90s, all these old guys were like, gold's going to go to 5,000, 5,000. They're going to go to 5,000. And everybody laughed at them. Well, there's GC now at 50.69. I really hope that they're still alive to see it. I hope they are. Because they've been lugging gold deals for a long, long time. Right? They've been lugging gold deals for a long time. You're holding silver from 34? Beautiful trade. That's beautiful. Dave, I don't think I've watched it I'm just kind of getting back on my feet with after this cold. I'm still sniffling, but I'm almost better. It's been the weirdest flu. Yeah, the whole short paper thing, is that the JP Morgan short thing? Yeah. Don't worry, they'll find a way to weasel out of it. They always do. All those old brokerage firms, Goldman Sachs, the white shoe firms, Goldman, JP, they always find a way. They find a way to weasel out of a bad situation. Goldman doesn't really make a lot of mistakes, but the other ones do. Okay, where was I? I got carried away here. Alrighty, so let's go take a look. Overnight point of control has now moved up, right? It was here. So we went from 69.29 all the way up to 69.41. We got good distribution, right? Put in a new overnight high just now. We ran all the stops. Everybody's waiting for this market to fall apart. Here's the thing, folks. Okay, Mr. Trump was saying Canada tariffs. They have to actually put that into a law, don't they? So until they actually go and put it into a law, he could change his mind. Right? You know, the macro hasn't changed. Everybody thinks it's going to change, but it really hasn't yet. Right? The charts are telling us that nothing has changed yet. Because we are going to open inside Friday's range and inside Friday's cost basis. So if you bought ES at 69.48, 69.50, 58, you could still buy it at the same price. You know, so these are things that you have to be aware of. That's why we look at these charts. You don't need to be a market profile expert. All you need to see is we went and had a fire sale and we're right back to where we started. So there's no change. There's no change. Right? It's business as usual. So when you open inside the previous day's range and cost basis, it means probably this. Right? Will we go test that low? We could. Could we go test the overnight low? For sure. This is a speculative market. Right? This is a speculative market. And when news comes out, it spooks the market and everybody pulls their bids or their offers. Right? So news comes out, everybody gets spooked, the algos react in microseconds, milliseconds, whatever the smaller unit of time is, and it'll pull all the orders out of the order book, and the price will shoot up 20 points or down 20 points. That's called a thin market. Right? In the old days, it would take time to pull those orders out of the book. Here it happens instantly, before you can blink an eye. That's why we have to be, what are the implications for us as retail traders? Number one, don't trade when news is on. Number two, always use a stop, right? And number three, in this market, this week, so what do we got? We got a Fed meeting on Wednesday. We got earnings, right? We got month end, right? And then on top of that, the icing on the cake is all the news. So you get government shutdown, tariffs, blah, 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 blah. But this is the cake, right? The icing on the cake is this. That means for you and me as a retail trader, we only take those trades, right? We only take those trades that we really have a shot at, right? We don't take FOMO, MOMO, all that stupid nonsense. Look how thin futures are. There's three cons. If you dropped a large buy or sell order in this thing will go nuts. Look how thin. There's no book, right? So you got to be careful when you're trading this stuff, right? There's no cushion, right? Daily chart on ES. We're above 69.25. We're going to have sellers at 69.88 and 3/4, right? I think we're going to get some rotation. It might be choppy here, right? Our upper stops are here, 56, 58 in the 62s. Here's my chart. You can see we've been in distribution all night. We had one little look below VWAP and fail, below 25.25, and then straight back up, right? Let's see what happens when we open, right? Inventory is now long, right? Overnight inventory is long. We have the point of control, right? The volume is now above the close. So let's see. Find the bid off the open. Got 8 minutes here. So people who are joining us this morning, the chart on the right is a market profile chart. It's like a map of the city. And then when we want to take trades, the 1-minute candle chart is a map of the neighborhood that we're in, right? See, we have these little distributions, right? These are distributions. And these distributions, they've been bringing in buying. And then you put it on sale, bring in buying, put it on sale. So let's see what we can cook up here. Hey, Abjit, how you doing? Quite a few less people on stream this morning. Hope they have power. Saw some places got pretty big dumps. How long did it take you for me to be profitable? I started retail trading in 2012. The first 2 years were horrible, man. Hey, cash flow. First 2 years were horrible. The third year, I started putting it together, but consistently, it took me probably 3.5, 4 years. Because I was like you guys, I was wandering around in the desert trying to figure out how to do this. And also, I wasn't trading candles. I was trading pure market profile. So it took me a while, man. It was frustrating. And a lot of it I didn't trade. I just sat and watched and watched and watched. Because what happened was after my heart attack, I had no dough, right? I was busted out. My business partner had stolen like 8 figures from our group and ran away. So it was tough. Though I had no mentor at all. I had no mentor. I didn't know how to trade. I had no discipline. I had none of that, right? Look at this point of control moves up, right? I was I could make a market, right? I could, sell blocks of stock. I could move market makers around at will, but retail trading, I sucked, right? I'm getting better, thank you. This is the first week I'm kind of on it. So it took me years because I was wandering around and people would say, try this, use this indicator, use that. None of that stuff worked. And they said, memorize these candle patterns. I was like, oh, get out of here, man. Tell me why. Can somebody tell me why I'm going to buy this and why I'm going to sell this? And it took me a long time to figure it out. So what happened with me was when I started, one of my friends, his mother staked us. But if I lost a little bit of money, I would stop trading. I would stop. And I would just watch the market for months and months and months. And she said, it's okay, you can lose the money. I'm like, no, it's not okay. I'm not going to lose the money. Right? I got to learn in order to do this. So I'd sit and I'd watch for hours. I used to watch the market pretty much 16 to 18 hours a day. And I'd make notes. And I'd try to put together a trade setup. It took a long time, man. So that's why what I try and do now is I try and shorten that learning curve. What do you guys need to do? What do you need to look at? What should you ignore? When do you trade? When do you not trade? Now let's look at how do you enter the backside of a trade. Well, right now this market is in the front end of a move. This is distribution, right? So let's say this is the front end of the move. Then it puts in a top. Then you see the offers moving down because the tops of the candles are getting lower. So you put your short on here. You put your stop here, and then you bid, bid, bid. The market goes down and hits your bids. If it does not take out those bids, you cover your short. So front side of the move, back side of a move. Everybody shorts this. Everybody wants this. This is the I'm a hero, look at me. Right? Look at me. I'm hanging out with supermodels. Oh crap. I blew up my account. You want to wait until the sellers start competing. Now, if you watch my morning video, right? How many lower tops? Good question, George. Oh, sorry, happy. Right? What I do is I will only short when it goes to the edge of one of my profit zones and then comes back in. It's called the look above and fail. So when it gets underneath 43, that's when I put the short on. I put my stop here, and then I put some bids down here. Right? If the zone is too small, then I don't take the trade. Right? I need to see a seller. You see how we went sideways? How many people do you think are short here? I think quite a few because now the bid's above 55. Right? I'd like to see, I'd like to see a market come underneath, and then take the short. You see how if you get used to watching where the sellers are, you can see right now the sellers are raising their price because they've got people who are desperate to buy. Right? When you have desperate buyers, what do? You take advantage of them. Right? It is a moral imperative that if you see somebody in trouble in this business, you got to take advantage of them. That's how people make money. Right? You take advantage of trapped shorts, you run the price up on them. When there's trapped longs, you bang it down and shake them out. Right? Hex. Hex, what are you smoking this morning? What are you smoking, brother? No, just erase that before I get in shit, okay? Can you please erase that? People are really sensitive right now, so any kind of political stuff, just keep it to the charts and price action, all right? If you don't mind. All right? Your commentary, we love you, but your commentary isn't worth a tinker's cuss, right? Sorry, I could erase that. All it does is piss people off, right? Just keep it to keep your commentary to the charts. Right? That's all we want. All right. There's a seller up here at these stops. Let's see if we go down to that cost basis here. All right. Hey James, how you doing? Welcome, welcome everyone. So now we're into this cost basis. So if you shorted right off of that open, you should be covering some here, right? Because we're right at cost basis. That's where you'd want to be covering. Now, if you're still short, you want to put some bids underneath 59, right? Look for a seller before you just indiscriminately short something, right? Looking for that overnight high. Poof. Trap, 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 trap. Right? That's all we're doing is we're just trapping shorts. We found the bid at 55. Right? I'd log 60 and a half, and I'm selling them here. 3 points. Okay? Right? The more people short the market, the higher it's going to go. We're looking for 69, 67 and a quarter. Next set of stops up at 67. Right? We took out yesterday's high. There's a look above and fail of that. So if you are shorting, sorry, this is in the wrong spot. So if you're short underneath yesterday's high, your stop's going to be right there. Right? I don't see a short just yet. I see the bids coming in. I see the offer moving up. I need a seller. Everybody understand what I'm talking about? We've got sellers here. So the seller's at 64, 65, right? 2 candles with the exact same top. That's where the sellers are competing. You guys awake? Now when it backfills, let's see if it can get under 60. So if you're short 64, stop 66, right? You put a 61 bid in, and if you can't get filled, you know that there's nothing for sale under 61. Right? How are you going to get paid on a short if nothing's for sale? Right now I missed the short. Happy, I missed the short. So had I been on the ball, I would have been short 64. I would have had a 61 bid in, right? And my next bid will be here around 59, 58. Because we're going to backfill and we're going to come to the overnight high. That's where the next set of shorts is trapped, is here. Cool? Look at that. Put it on sale for 30 seconds. What had happened? It brought in buyers. So the sellers here raised price. This is what you got to watch out for. And if you're not used to this kind of trading, I would highly suggest you spend some time watching and making notes. I know it's not glamorous and you're not getting paid to make notes, but you will maybe learn something, right? And that's the name of the game, isn't it? Alrighty. All right. Offers are lifting. It's really, we're still in the front end of the move, my friends. Then we're in 8 times cost basis. Once you get into 8 times cost basis, I'll go 4 for now. Where's our next stops? Now you're looking at that profile. There's an untraded cost basis up here at 69.86. 69.83 and a quarter is one of my levels. Let's see what happens, right? So now we are above the cost basis of last week, ladies and gentlemen. Right? Oh man, I feel bad for you. I'm just getting over that flu. It's a rough one. So let's see if we get over 69.73. Yeah, you guys have some sort of a gap, one of your Cool Ranch Dorito gaps? That's okay, all right. You could use it. If the levels are working for you, you could definitely use it, right? Not a big deal. Yeah. See, the market profile guys, what the heck happened to my... If anybody has... Yeah, you guys are looking for that as a gap fill. We look for this, like the range of that day. So when you take these upper stops, what happened? Right? We had a gap down, and all that gap did was trap a crap ton of shorts. You know? That's all it did. Let's see. The coin of bitterness is up $1,400, $1,500. Ethereum's up $100. Point of control up here. Look at how much short covering there is, my friends. Look. Right. So if you're long, well, we got some sellers at 73 and a quarter. So we're going to go and put it on sale. If it gets on sale big enough, it's going to come down to 64. Right? That's where those bids will be. Why? Because when we took yesterday's high, that's where that buying is going to come in. And then this high here, right? This high here, that's a swing high. So let's mark that. Because that's why you see all the short covering that came in when we took out 69. So when we backfill, there should be some bids here. If we break 69, you could look for down to 64. But if it hits 69 and bids, boom, right? How do you confirm a level? You look for the seller, my friend. What I would suggest that you do, I show you guys on videos all the time, and if you want to learn how to do this, WRX, I'm assuming that's the Subaru, come check out the Trading Syndicate for 29 bucks. Actually, it might even be 19, right? You look for the seller. So once you see a seller, you put on the short. You got to be quick, right? You can't be slow, right? You see a seller, boom, there's the short. There's your stop. There's your bid. If that bid doesn't get filled, you scrub your short, right? The best shorts are when it looks over one zone and comes back into another, from one color to another. That's why these are different colors. When it goes from purple to gray back into purple, that's the better short because you've trapped people long above it. When you don't have enough people trapped long above it, it only sells off for 1 or 2 minutes. Does that make sense? So if we traded like this and then came and took this out, you'd have a better opportunity because all of these people are trapped and you're going to get that downward pressure. But when you're only above that level for 1, 2, 3, 4, 5 minutes, it only takes a minute or two to flush people out. Boom. Right? So the bottom of that candle couldn't hit 67 and a quarter. That means they don't need to sell it under 67 and a quarter. Why would you be selling something you don't own in an area where the people who own it don't have to sell it lower? When you are a short seller, you want to see sellers desperate to get out of their inventory, right? If they don't want to get out of their inventory, what in God's name are you doing shorting a market? That's what people don't understand. You need to see that the market has sellers. If the market doesn't have sellers, right, you don't have $100 million to screw around holding a short position for a couple of days or even a week or whatever, right? It's a very simple lesson, but I'll guarantee you no other trading room on this planet will tell you, hey, you only short when you see a seller. They'll say, oh, you have to use this or you have to use this confluence, flatulence, blatulence, blah, 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 blah level, right? No. Is there a seller? How do you know if there's a seller? Because they're lowering price, right? So if Ben and Allright and Jam and Happy Go Leverage and James and I, we're all sitting at a level selling. We're all selling tacos at $2. You know, and then Raj comes along and he offers his tacos for $1.90. Well, the guys, I mean, if they're all the same taco, people are going to go to the $1.90 guy and save 10 cents, right? You guys awake? Yes? No? Maybe I've had too much coffee. Does that make sense? Do you guys understand what I'm saying? Is this thing on? Hello. Just checking. Right? Yeah, they love to overcomplicate this, so you guys spin your wheels and pay for trading courses you don't need to know, right? Thousands of dollars, hundreds of dollars a month for some trading room that tells you, you know, when the rain in Spain falls gently on the plain, then you look at the RSI, divide it by pi, pick your nose, and then put on the trade, right? Yeah, exactly. What's up, Ed? I think that's Ed. Right? I don't see a seller. It's a market. These markets have been around for hundreds, thousands of years. You know, when supply runs out, price goes up. When they know they've got you, price goes up. Right? When they have to price compete, that's when price goes down. Right? Look at this. These guys, look, the people who are long from last week And then the people who are long from the liquidation, they're having a beautiful day because everybody was shorting under 69.23. Those bastards bought every last contract, right? They're sitting there, right? If they were on the floor, they had their palms in. Palms in, baby, palms in. How many you got for sale? Take them, take them, take them. Bid and take, bid and take, bid and take, bid and take. That's what's going on now, right? Exactly. They're squeezing last week's shorts, right, Brian? And they're also squeezing the shorts from overnight. Now let's see if we can go tickle that 78 and 3/4 stop, right? Yeah, last night was a perfect catcher's mitt. Oh, this is what I was talking about. 68.72. When J period took the high of I on the 21st, that's where everybody got caught short. Look at the overnight low. Look at that level. Everybody came in to buy there, and that's when the market, it opened, it went all the way down there, and it trapped everyone. Now look at it, right? You saw that in Globex, right? The shorts are being put in the meat grinder right now, right? It's brutal. The other thing, too, is this market is what? 40 points away for the all-time highs? Right? And while we're sitting here destroying the shorts, those of you who are long, stay long, maybe move your stop and trail them, right? Put your sell orders out so you can, I'm looking for 69.83 for a little bit of resistance, if we can get there. But you guys know why the reason why these markets never, no, yeah, buyers are never in control when price goes up. Only if they're on a 4-day Coke binge, George. Yeah, buyers are never in control when price goes up. But do you guys want to know why this market liquidates and then always hits a new high? It has to do with the way the market's structured. All the large companies, the stock in those large companies is held by investment companies that have trillions of dollars who've paid for that stock in cash and are not subject to margin calls. So it's like buying a car for cash versus going through a finance company so you don't get your car repoed, right? Plus, also these companies buy back stock and they remove stock from the treasury. So there is a lack of floating supply. Look at Apple. It's got, 15 point something billion shares available to trade. It trades less than 1% of that on a daily basis, right? It's just us, swing traders, some hedge funds. We're just banging around in there, right? But the large companies, BlackRock, Fidelity, Vanguard, State Street, they've bought their stock. They're holding it for 3, 4, 5 decades. It's paid for in cash. It's never going to see the light of day unless there's accounting fraud at Apple, or unless, Microsoft comes out and says, we're going to sell cotton candy. We're not going to do software anymore. Unless there's a material change in the earnings of these companies, they're not going to come out of their position. And even if they could come out of their position, how do you sell 900 million shares of stock if a stock only trades 40 to 50 million shares a day? Riddle me that, ladies and gentlemen. And don't say black pools or dark pools, right? Because you got to find a buyer for a block of 500 million shares of Apple. Good luck, right? So how do you guys know when something is bad is going to happen? When you see Apple, look, what is it traded here? 7 million shares. That's nothing. Right? It's nothing. Right? Learn market structure, ladies and gentlemen. It doesn't matter what the company is doing. It matters who owns the stock and how deep their pockets are. Right? So you've got deep pocket investors. Okay, here's a little short. If you're short, right? These are like hit and run shorts, right? Your stop, there's the seller. Your stop 79.25, right? And then you put some bids down. Do you take the Mag 7 into consideration? Yeah, I just talked about it. Happy. I was just talking about Apple, right? But I don't look at them to trade the ES. I'm not one of those guys who looks at one market to trade another, right? I like to watch the traffic on the street I'm trying to cross. I don't want to look at the traffic on another street because I'm going to get clipped by a car. So I'm very focused on the order flow in the ES because that's what I'm trading. I'll look at the other stuff, right? Just to kind of, it's like looking at the weather. Ooh, is it windy? Is it raining? You know, you get a sense of what's going on. So this has been a very painful A period for these shorts. And right here, I don't want to touch it. I don't want to short it, and I don't want to go long, right? The reason why I don't blow up accounts and the reason why I don't lose huge sums of money is because I only trade when the terms and conditions match my business, right? I can't do business just throwing money around, right? You guys who are blowing up accounts and losing money, it's because you don't know what you're doing. And no amount of trading psychology is gonna fix a lack of education, right? And a lack of skill, right? So what you need to do, it's not trading psychology. You got to understand when to trade, when not to trade. You got to understand, hey, this is the kind of trade that works for me because I've tested it over and over and over again. And I will only trade when this shows up, right? So when that trade shows up, then I execute ferociously, ruthlessly. But if that trade doesn't show up, you aren't getting my money, right? You have to have a good degree of, like, I see this is distribution from 74 to 78, 79. There's no reason for me to put capital at risk here. There's no edge, right? I look at equities, of course. We got earnings season, but I don't trade them. Look at that. See? This is what we call a backfill, right? You go up, you put it on sale, it brings in buyers. You go up, you put it on sale. You put it on sale, and when that brings in buyers, you know that, not really a good short. If we take out 74, you'll look for support at 68. It's not a lot of meat on the bone. This is very frustrating for retail traders because if you buy it here on this move up, then you get stopped out, then it goes. If you short it down here on this move down, then you get stopped out. It's really frustrating to short distribution or to trade distribution. I prefer to trade accumulation over distribution. What makes distribution harder to scalp than accumulation is because the sellers, Josh, never show their hand. Right? They sell for two candles like right now, right? Shorting this is a fool's game right now. Right? It's a pain in the ass. Right? So say, Josh, you came to me and you said, "Hey, JJ," right? Say it's a stock, ABCD stock, right? And you need to sell 1 million shares of that stock, right? And it trades maybe 5, 10 million shares a day. And you're like, "JJ, I need you to sneak me out of 1 million shares," which means, right? If if you're a seller, like maybe the group that you're doing, you're working with, they don't want you to sell, right? You want to sneak it out. Then I'll route those orders. I'll move them through different market makers. I'll route them through different countries so nobody knows where the source of the selling is coming, right? How do bids show their hands? Because the offer moves higher. I don't know what you mean, AO. Oh, people don't like 2-point trades? Well, doesn't really, I don't care what people like. It's a business, right? I'm not baking cakes, right? It's a business. You want to make money or you don't want to make money, right? I don't care what people like. I don't mean to be rude, but who cares, right? You go sit on a trade desk, AO. I'm sure they're not gonna give two rats asses about what you like or what you don't like, right? It's a business. You want to make money, make money. If you don't want to make money, go do something else. We're not. This is not a taste test. We're not making cookies, right? We're trying to make some scratch. So you got to really be careful where you're putting your money and where you're risking your money in a market that is very, very unforgiving. Right? I hope that's what you meant. I don't know what you meant, Ale. Sometimes you're kind of confusing. Right? So don't take offense. Right? Look at that. On the retraces, if you're paying attention, right? You candle wax traders, up, down. It can't trade at this level. Up, down. The bid is moved from here to here. It's moved from here to here. It's moved from here to here to here to here. The bid is following the sellers up like a dog, right? That's how the bid shows their hand because the offer will move higher. When the offer moves higher, it means the buyers are there and the sellers are raising price. Right? The lows are moving higher, right? You guys call that trend up or one-time framing. Yeah, it's just harder to trade in chop AO, right? You can make money, but you have to have the skill to be able to trade that chop, right? So you got a small range here, right, from 76 to 79. So, you know, I'm not saying it's impossible, it's just harder. Oh yeah, everybody wants home runs, right? Everybody wants a home run. I'd like to have a home run. Right, but that's not how business works. Hey, Hank, how you doing? Good to have you with us. This has got to be one of the longest A periods that we've been in, right? This is like a long half-hour bar. Oof. We want you to get paid. Oh, man. Hey, that's cool. How's the little one, Hank? Getting her started early? Her first words will be hit the bid. Oh, yeah, there's definitely home runs, Brian. There's definitely home runs. The thing is, do you have the skill to trade the home run? Do you have the capital to do it? Right? 99% of people don't. Why the hell would you want to try and hit a home run when you can make money every day consistently? See, the problem in this business for retail is the ego over skill. Ooh, do we have a seller? Look alive. Here we go. Okay, I think I see a seller at 78. Let's see what this next candle does. So if you're test short, do a little short here at 76. I covered what at 75.5, which really sucked. Man, there is no joy in Mudville for the shorts. Let's see if that B low moves lower. If it takes out that top of that B, I'll scratch. Right? Nah. Can I get one at 75? Oh, you dirty rotten. It traded at 75, but I didn't get filled, so I bought it back at 75 and a quarter. Yeah. Scratch. Did I see you in the OFL Discord community? What is OFL? Is that like a football league? Like NFL? Or are you talking to somebody else? Yeah, I should have held that a little longer. We only have one Discord community. It's tradingsyndicate.org, and I'm the head educator there. And we trade futures, equities, crypto. Order Flow Labs? That's Order Flow Labs. That's adorable. No, 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 I am not in any other Discord room. Cute name. Let's see. The sellers are at 77. Let's see if they lift. We'll go print some 78s. Let's see how much interest we have. They still have sellers here at 77. Look at gold. Oh, let's see. I just have it on a weekly here, folks. So I got a cost basis on gold down here at 1700 to 1900. My upper target is 552.25.80. The GLD ETF. Oh, that's the futures. Where is the ETF? There's gold, right at 468.79. Levels are working okay. Gap, gap, gap. Let's see if we can accept over 469. That'll be interesting. Yeah, that's good. I'm really happy for. I got a bunch of friends who have gold deals, and they've been lugging those stocks for decades, right? Just at 30 cents, crappy. I hope they're all just printing money right now. My gold guys deserve it, you know. All the Vancouver resource kids. Well, they're not kids anymore, eh? The DOM is a complete waste of time. I use it to put my orders in, but I don't use it to predict the next move. You know why, Slippy? Only a trader on a 4-day Coke binge is going to put his orders in the DOM and show you what he's going to do. Think about it. If you're a business person, are you going to run around telling everybody what you're going to do so they can basically screw you? Or are you going to hide your orders? Or are you going to put in orders that are the opposite of what you're doing? Right? I've been manipulating the level 2 for 30 years. You come into a stock, I'll trade 5 million shares around you, you won't know what the fuck hit you. Excuse my language. Right? If you're looking at the level 2, I will eat you alive. Right? Use the chart. See, the thing is, you can tell. You can tell there's a seller here. Right? People hate simplicity. They want people to sell them some complicated bullshit. Right? You know there's a seller there, right? The sellers are competing at the top of those candles. Right? If the offer moves up above that, then you know they've seen buyers and they're raising price. How much more simple does it need to be? Right? I'm trying to make your life simple. Why would you want to look at a DOM and 3 kinds of charts? What if gold runs over 52, 25, 80? I'll have to do some more levels. Like the guy in Jaws says, we're going to need a bigger boat. Right? I don't know anything about the gold market. I haven't. The last time I did a gold deal was 2012, right before I had my heart attack. We were drilling in Alaska. So that's the last time I looked at the gold market. So see, Slippy, you see there's a seller at 77. You don't need a DOM for that. What do you need a DOM to see that there's a seller at 77? Right? If those sellers lift, watch. Right? See, it just sounds fancy, right? Orders pulling and adding. Who would show their hand on a DOM? A DOM is an order book. They're expressions of interest. They're not transactions. So if you knew that there's a seller at 77, why would you buy 77? Right? If your long product at 74, you'd be selling 77. See how simple it is? Because everybody else is selling 77. So if you don't sell it, they're going to sell it down, right? There's something to be said for simplicity. Focus on the price, brother. It'll make your life so much easier. All of these trading rooms and software people, they want to sell you order flow software, which is the biggest scam around, right? They want to oh, I've got the magic bullet. A 1-minute candle chart will tell me more than anything. Right? Yeah, we'll see about that, all right. You know, just because somebody puts that in the trading room, be careful about this, getting into this 10-10 algo bullshit. Okay? Because just watch out for that, right? Just because we have some people who post in the room a lot, right? And they talk a lot. But where they get their information from, don't rely on it, right? If it happens, great. If it doesn't happen, you know, those people haven't programmed an algo. They wouldn't know an algo if it came up and punched them in the face. So if the order flow supports it, it'll sell off. Just being aware, but I don't want you to like unduly bias yourself based on something that may or may not happen, right? We did check the AI on it, Alexander, last week, and it was false. So I don't know. Just watch the offer. Just watch the offer, right? You did, right? Somebody did. There'll be a lot of Yorkshiremen flooding the streets of Liverpool. Why? What's going on? It would be good if we had a sell-off in a minute. Let's see. Right? If I was shorting, right, I could see that the offer moved from here to here to here. Right? What about big blocks? Yeah, that's a scam as well. Let me ask you something, my goal 1,000. Are you trading 5,000 ES contracts? Are you trading 10,000 ES contracts? Right? What I think that this 10-10 algo is that after a distribution, you run out of buyers and you're going to put it on sale. That could be it, right? So if I was short 76 against 78, I'd put some bids down here at 73 1/4. and 72 and see if I'd get a fill, right? You're trading on a demo, don't worry about blocks, man. Don't worry about it. The 1009 algo, right? Exactly. So we got a little correction. There was a little sell order, but I just don't want you guys to get biased off of what somebody says, right? We saw that the offers were moving lower. So had we been short 76, right? Take a little short, right? Now let's see where the bid is. Right? Generally what that would be is after a distribution, there's a sale, right? If it's precisely at 1010, great. But don't short just because. This time it worked. I just don't want you guys, right? Because somebody comes in the room and they talk a lot, right? And bless them because they're trying to help, right? But just don't get biased. Yeah. Every time I listen to someone else, I lose money. That's me too, Ed. It never happens to me where I listen to somebody and I just make money. That's never happened to me. I've always had to figure it out the hard way. It's funny. Yeah, it's important to let go of a lot of the rumors, right? Porsche? Oh, don't get me started on cars, Hex. I'll never shut up if I start talking about cars. Just use the top of the candle, George. Just use the top of the candle. See, the top of the candles were here, and then they move down here, then they move down here. That means the sellers are all competing with each other. So Walmart has it on sale. Best Buy puts it on sale. Whoever else puts it on sale, I'm not sure who the U.S. retailers are. Leeds versus Everton. Oh my God. That means they're going to be right, because I live right near Everton, the new stadium, so. We're still in distribution, ladies and gentlemen. We're still in distribution. So for you volume profile folks, right, if you went and drew a volume profile, just say from here to here, you see the distribution? It's beautiful distribution. Now, what we hope for my short sellers who are trapped is if we hope that long enough, people get long for enough time up here, you'll get a liquidation. Oh, that's right. Ferrari's public. I forgot about that. What's the symbol? Don't get me distracted. See? Little look below and fail of 73. Race? Oh, that's a good symbol. Don't get me started talking about cars because I'll stop talking about the market and everybody will get pissed off. The seller at 80 is still there, Moran. Yeah, I would not turn down a 60s GTO. Or one of those 250 GT Lusos. Those are beautiful cars. Oh my God. New ones? I'm an old car guy. Yeah, that seller's still here, Moran. Or group of sellers, right? Now they're starting to lift the offers because they see buyers coming in. Short squeeze continues. 69.83, that's the level I'm looking at. It's right there, 83. Yeah. Ugh. Tag that stop to the tick, eh? Look, that stop from the 18th or whatever it was. Tagged it to the tick. So they stepped in and sold there. Let's see, do we get a liquidation? Ugh. Not seeing a short here, my friends. Not seeing a short. Well, Jason, you can get me talking for hours about that too. I had a C4S. I should have never sold that car. I didn't have a choice, though. It was 9/11. I lost my 9/11 after 9/11. All right, offers are lifting. Oh, what a brutal time that was. All righty. I did enjoy it. You see how much of a pain in the butt it is to short this market. You know, it's just this is one of the worst markets I've seen in my life for a short seller. Right? It is just one of the worst markets for short selling. You got to be quick. You got to hit and run short. And when I first started retail trading, we're looking for 69.83 and change. When I first started retail trading, I thought the ES would be just like stocks, right? There's dilution. Just sell a few, sell a few, sell a few. Oh my God, Ramada. It's like, what the hell? It's up 6 points, 7 points, 8 points. It keeps going, right? Then I figured out, oh my God, all the positions are limited, right? All the large stocks, all the supply is hoarded by these huge, massive trillion-dollar companies. There's 83 quarter. Do we get a reaction? Not much. There's a seller there, but they're not aggressive. See, and this kind of pattern, I don't know what you guys, maybe you guys have a chart pattern for this, but the market goes up and it distributes. People short it, and that distribution brings in buyers. Boom. Same thing. And then we go and distribute. People short it. Boom. People short it. Boom. So when you see this, right, that is something I'm very cautious of on the short side. And for a long, I'd really like the market to do this: liquidate underneath 67 and then come back up over it so I could get a deal on it. I don't want to pay 8 times cost basis to try and hope and wish and get it up here. Seller is a profit taker. The other thing, Ed, is I know because I've been the seller, right? See, when you've been the seller, it takes one to know one, right? So if you're long product, if you had to buy some product here, you'd be selling it at these stops, right? Can you tell if it's short covering or genuine buying? In this market, after a move, after a gap down, And what happened last night? This is short covering. Now, the problem with short covering is if the short covering lasts long enough, it's going to attract genuine buyers. It's like when people see a nightclub lineup, right? They'll go stand in line. Short covering, if you can pull off and hold short covering up long enough, it'll bring in real buyers because they'll be like, oh, the price is stable. Let's get in there and buy some, right? That happens every single time. Yeah, but Ed, the sellers are profit takers, right? Because if you're doing two-sided business as a market maker, you have to buy position here, right? You're selling, but you're also buying. It's a two-way business. So when you go up here, you're going to sell into that. It's when they start competing, that's when the short comes in. So we're creeping up on those next two stops here. What were the earnings out this morning? Were there any earnings out this morning? Yeah, that's all it is, Abjit. So the cost basis here is blue, discount zone is red, green is 2 times cost basis, purple is 4 times, and this weird gray color is 8 times profit. So that just keeps us, it keeps us balanced, right? Do I really want to buy it here, right? I've taken maybe 3 trades today. I got stopped out on 2. The second one I did, you know, I am being cautious jumping into the market this week. It's kind of the first real week that I'm feeling better. I hate trading short squeezes. I like doing short squeezes, but I hate trading them. So I haven't scalped a lot today. The nice thing about this business is we have a 23-hour market. Oh boy. There we are, folks. And just like that, we're back where we started before that big liquidation of 2 weeks ago. Oh, so staying above 69.83, we target 93 and change. And we just have, that's the rest of our inventory. We'll have people will have stops at 7,003 and then here. So yeah, just because it's slow doesn't mean it's weak. It's not like the old days when human beings were in charge of this, Hank. It was a much more, it got cheap enough, right? We had a fire sale overnight, Ed, right? The old Kmart Blue Light Special on that Globex Open. And boy, they came in and they bought it up with both hands, my friend. This is the worst kind of price action, and I'll wait for my trade. As much as I love trading, unless I see something, a clear trade, I won't take it. Because I'm cheap. I don't like throwing money away. Now let's see if we can liquidate this back down to 69.83. Because when the next half-hour period opens in 3 minutes, and that's why I have this little clock here, it tells me how much time is left in each bar. Right? I know that there are going to be buyers here. Because that's where the shorts, the fresh meat shorts are trapped here. Right? They're trapped under 80. Right? You can see they're trapped they're trapped here. And then when we lifted the offer, when we came back down to that area, it bid. So let's see if it still bids. And I apologize, I haven't been on the ball enough. I should have been shorting these backfills, but I'm still not at my best on execution, which means I'm just going to take my time and watch a little bit more and get zoned in. I don't like trading unless I'm really, really focused, because I just screw up. There's two nice red candles. So if you're short 86, 87, go put in a bid at 80. See, there's where that bid's going to be, right here. See how the offer lifts when we get right there? Now let's see if we can get back over 83.25. Nice work, Hank. I'm still getting my, oh man, I'm still blowing my nose a lot. So we have a seller at 83. They're not aggressive, but there is a seller there. So if you're short and you didn't cover 80s, you could still be short. Put some bids in here at 80.25, 79.75. So when it pops down there, you'll get a fill. There you go. There we go. And we'll just come down to the top of this cost basis now. That was a nice backfill. Hope somebody caught that on the short. So tomorrow, hopefully, folks, I'll be a little sharper. When I see that seller, that's when you initiate the short. You put your stop there, and then you put your buy orders here so you cover when the market goes down. Any questions? Well, folks, thanks for being with us. Come join us at the tradingsyndicate.org. We'd love to help you on your journey. Get profitable doing this. Hey, we're not going to have any single prints. Good. Look for the next bid. Lower stops are going to be underneath that B low at 71. Have a wonderful trading day. I'll check in on you later in the room. Thanks, everyone. Bye for now.